If you're thinking about retirement or just trying to get ahead in your financial planning, there is one term you'll definitely want to be familiar with. In retirement planning, we know that the magic age is 59 and a half or beyond. So what does that mean? Does that mean we're all supposed to work until 59 and a half, or does this earn us bonus points? Well, no. This is the age that the Internal Revenue Service, the IRS, has outlaid to discourage those saving in retirement plans from taking from their retirement savings accounts early. The IRS generally imposes a 10% penalty on early withdrawals from 401k plans, 403b plans, and individual retirement accounts for any person taking withdrawals before they reach the age of 59 and a half. Now notice I said generally, because what if you retire early, or if you don't have any other options and you have to withdraw early? Is there a way to get around the 10% early withdrawal penalty? Well, yes, there are. Here are a few options. An IRA withdrawal for medical expenses. You may not need to pay the 10% penalty on an early IRA withdrawal if you use the money for major healthcare costs. IRA distributions used to pay for medical expenses that are not reimbursed by health insurance and exceed 10% of your adjusted gross income are not subject to the early withdrawal penalty. To find out the maximum amount you could withdraw from your IRA without penalty, add up the amount you paid for unreimbursed medical expenses in the year you took the distribution and subtract 10% of your adjusted gross income for the same year. You don't have to itemize your taxes in order to take advantage of the penalty exemption for medical costs. An IRA withdrawal to pay for health insurance. Unemployed individuals may be able to take early IRA withdrawals without penalty to cover the cost of health insurance premiums. Now, if you lose your job and collect unemployment compensation for 12 consecutive weeks, you can take penalty-free IRA distributions if you use the money to pay for health insurance for you or your spouse or dependents. To qualify for this penalty exemption, you must take the distribution in the year you received the unemployment compensation or the following year, and before you have been re-employed for 60 days or more. An IRA withdrawal for college costs. Penalty-free IRA distributions are allowed to pay for college. Eligible expenses will include tuition, fees, books, supplies, and equipment. Room and board also count if the individual attending college is at least a half-time student. The education must be for the account owner, his or her spouse, or their children or grandchildren. Qualifying institutions include colleges, universities, and vocational schools eligible to participate in federal student aid programs. However, IRA withdrawals are considered taxable income and could reduce the student's eligibility for financial aid. An IRA withdrawal for a first home purchase. An early IRA withdrawal can be used to help fund a first home purchase. You can withdraw up to $10,000, $20,000 for couples, from an IRA to buy or build a first home without incurring the early withdrawal penalty. To qualify for the exemption, you must not have owned a home for the 2 years preceding the home purchase. If the purchase or construction of your home is canceled or delayed, put the money back in your IRA within 120 days of the distribution to avoid the penalty. This type of early IRA withdrawal can also be used to help purchase a first home for a child, grandchild, or parent. An IRA withdrawal following the birth or adoption of a child. Parents of newborns recently became eligible to take penalty-free IRA distributions. Beginning in 2020, IRA owners can withdraw up to $5,000 without penalty following the birth or adoption of a child. The distribution must be taken within 1 year of a child's birth or adoption. If financial circumstances improve, parents have the option to put that money back into the account to accumulate it for retirement. An IRA withdrawal to pay for a disability. People with severe physical and mental disabilities who no longer are able to work can take IRA withdrawals without penalty. You may need to provide documentation that you're unable to participate in gainful activity due to your condition. Now, a physician will need to determine the severity of the disability, but conditions that qualify for the penalty exemption are generally expected to be of long, continued, or indefinite duration and result in death. An IRA withdrawal for military service. Members of the military reserves who take an IRA distribution during active duty do not have to pay a 10% penalty on the amount withdrawn. The penalty exemption is available to those ordered or called to duty after September 11, 2001 for a period of more than 179 days. The distribution must be taken during the active duty period to avoid penalty. Qualified reservist distributions may be available to members of the Air Force Reserve, Air National Guard of the United States, Army Reserve, Coast Guard Reserve, Marine Corps Reserve, Naval Reserve, or Reserve Corps of the Public Health Service. Set up an annuity. IRA withdrawals taken as a series of annuity payments are not subject to the early withdrawal penalty. The use of an IRS-approved distribution method and at least one withdrawal annually are required to avoid the penalty. The payments are calculated based on your life expectancy or the joint life expectancy of you and your beneficiary, and generally require professional assistance to calculate. If you don't consistently withdraw the correct amount over the appropriate number of years, penalties could be applied. Thank you so much for watching. I hope that you found this helpful. If you have any further questions on setting up, making distributions, or taking withdrawals from your retirement plan, please reach out. We'd love to hear from you. Thank you and be well.